Hello friends, welcome to Nifty Profits YouTube channel. Tomorrow 18/8 is the expiry. Normally weekly expiry is on a Thursday. This time I think Thursday is a holiday, so we have the expiry one day ahead on Wednesday itself. So I want to give you a low risk strategy in Nifty as well as in Bank Nifty for options. Okay, you will need approximately 70,000 capital for taking this strategy. First, let me review what is the position of open interest in Nifty options, because that is very important to know to to kind of predict where Nifty and Bank Nifty may expire for this week. So what the big money people are doing. You see, in today's trade, the market was oscillating on the downside and also on the upside. Ultimately, Nifty made another all-time high today. But what is the options saying? You see, today, see this big green bar. This is put writers. So put writers are very confident and have written lot of puts at 16,600 strike rate, and call writers exited from 16,550 because they are not confident that the market will go below 16,550 or stay around 16,550. Then only they will be able to make money, so they have vanished. This is today's trade, and new puts have got added in 16,550 strike rate, and also see this huge tower in 16,500 strike rate as well. So the all indications are saying that big money guys are confident that the market will expire either around 16,600 level or slightly below that level. The chances of the market going below 16,600 seems low at present, looking at this open interest build up during the day. And what is the open interest build up for cumulative for the week? You see, even here the 16,500 level put writers are very confident, and you see the smaller tower in 16,600. Still on a cumulative basis, call writers are more, though they wound up here. The overall cumulative position, still call writers are quite active. They are more than put writers. So what do we expect? I expect that the market will close between 16,500 to 16,600 level for this current expiry. If you see the max pain for the Nifty options, that is also indicating a 16,600 level. But normally on the expiry day, it moves slightly up and down, maybe about 50 points on the upper side and 50 points on the lower side. So the range could be 16,500 to 16,650 actually, but I personally feel that it could be between 16,500 and 16,600 will be the levels for Nifty. With that in mind, what is the strategy I am suggesting for you? The strategy I am suggesting for you is, let me make it bigger. I'm sorry for the difficulty. Right. I am suggesting you to consider selling two lots of Nifty 16,500 put at 13.5 each. So two lots means 100 shares, 13.5, you will get 1,350, and then buy one lot of 16,400. This is to mitigate any downside risk. And then on the higher side, buy one lot of 16,600 put, that is 50 shares at 34. So overall you will be paying 705 rupees. And if Nifty closes between 16,414 and 16,585, During the day, it may oscillate at this level. Remember this, because last few days the market has only made all-time highs. So there is a possibility of profit booking tomorrow. So if the profit booking comes tomorrow on the expiry day, since there is a holiday day after tomorrow, so people may shift their bets to the next expiry, which is the month end expiry also. So the market may very well trade in this range of 16,414 to 16,585, more in the 16,500 to 16,600 range. So if the market trades around that level and expires between this level 16,415 to 16,585, okay, your risk reward can be at the highest level. That is, if the market closes at this level, which is 16,500, then you will have 4,300 as your profit. But we cannot assume that pinpoint the market will close around 16,500. So if the market closes around 16,550 level, 16,550 level, then you will make a profit of 1,300 rupees, 1,300 rupees, and slightly more also. So during the day, if the profit comes to around 2,000 rupees, around midday, the market oscillates and you may have this profit around 2000 2500 level. At that time you can exit the entire strategy, that is all legs you will square off. So what is the capital needed for this? It is 35,000 rupees, and you will be paying actually 700 rupees because of the option price difference. Okay, this price may slightly vary tomorrow morning, but you have to take this trade morning by in the open itself. If you take this trade, this is the risk reward ratio. Now let me move to bank nifty. Let's analyze the bank nifty options open interest weekly. So what's happening in Bank Nifty? Bank Nifty yesterday had a max pain at 36,000 level, but today, because of the down move in Bank Nifty in the initial stages, the pendulum has swung. So now the call writers have an upper hand at 35,900 level and at 35,800 level. Today they have written so much of calls at 35,800 and 35,900, and the put writers were confident yesterday at 36,000 have unwound their position, and they are now existing at 35,700. They added some puts, and at 35,800 they added some puts. There is virtually nothing outstanding at 35,900, nothing added rather today at 35,900 level. So call writers are having upper hand at these three levels. Then let us see the cumulative position. Even in the cumulative position, call writers are strong at 36,000 level. Only if the market gaps up and moves above 36,000 level rapidly, these call writers will start to cover their calls. Otherwise, the market may swing in the range of 35,800 to 36,000 level only through the day, because I think the call writers are confident that the resistance level of 36,200 may not be crossed in this expiry. If you see here, all these towers, red towers, are all call writers, so they are very confident. Put writers are not as confident in Bank Nifty as such. So considering this, the strategy that I am suggesting for Bank Nifty is an expiry band of 35,850 to 36,150. And what is your cost? 1,250 outflow, and there is a risk reward of 1:3, and there is a 27% chance of you ending up in profit, which is quite good for an expiry day. So what do you have to do? You have to buy a 35,800 put at 68 rupees and sell two lots, that is 50 shares of Bank Nifty 36,000 put at 160, and buy a 36,200 put one lot, that is 25 shares at 302. So overall you will pay 1,000 250. So this will be your maximum loss that you may incur. And tomorrow morning the price can be slightly different, but I would suggest same strike prices only. The price may be slightly different, and probably you may end up paying slightly higher or slightly lower on a net basis. And take the trade in the one will take the trade in the morning and open. So what is the investment? Investment is you need to have 45,000 initially, and since there is a, margin, actual margin you will increase 37,300. And if the market closes between 35,850 and 36,150, at the peak level, if you are very lucky and the market closes exactly around 36,000, you will make 3,750. If it doesn't and it varies between 35,850 to 35,000 36,100 level, then your profit will be at least 1 is to 1, 1,250 you are investing, you will get 1,250. So you will get back your investment plus another 1,250 as profits. The return rate for this, for one day, if you look at it, the return will be something like 1%. Okay, that is morning you are investing and evening you are getting it back. Option rating, so it will give a nice experience of option rating as well. You may ask, why can't I go and buy a put itself? But there you may end up having a decay and may have a higher loss, end up having a higher loss. So this amount looks small, but it is more guaranteed return you may get of at least 1 is to 1 risk reward ratio. I hope you enjoyed this strategy. It's a minimum risk strategy. It's called modified iron fly. I learnt it from Quantsap app. Okay, so I love this strategy because it has got a very good risk reward potential. Thank you very much for staying with me for so long. I hope you will enjoy this strategy. Please do like, share and subscribe to my Nifty Profits channel. Bye bye. See you until next time.